What's cracking, investors? Hopefully you haven't been losing your shirt in this past week to month 3 or month and a half or so. I certainly have. I'm going to go all the way through all my positions as usual, show you the account performance related to the S&P 500. Go into the investing tab, show you the margin. It's crazy. Way too much margin on the books right here. I got to decrease that somehow, but I got a little greedy. We'll see. Buying too early as usual. And then after that, I'll just talk a little bit about inflation because I have some thoughts. So here's the account. I'm sitting at 165. Oh, this is the year chart, my bad. Today, I was down $659 or 0.4%, excluding the after hours. And these are all my positions. So I'm going to quickly scroll through them. So figure out how to pause the video player if you want detailed description of every single one of them. All of the information is contained within this little box. So as I scroll down, you can derive my entire account. There's a ton of options going on right now. Options on options layered all the way through. Calls, credit spreads, and selling calls and selling puts. There's a lot of selling going on. Here are my equity positions. Apple 708. It's a little bit of an odd number, but I ran into an emergency. I had to sell a couple of shares. And then we have Realty Income. I've been picking up a few shares here, and as well as Main Street Capital there. I think those two are getting into like extreme undervaluation zone. I mean, not relative to, rates, because rates are headed higher and they're already at a pretty substantial level. What is it, like 3.75 or something like that now? I mean, they're pretty high. And so these kinds of funds have a bit of competition from government debt, which is, they're going to pay you back the money no matter what. I mean, they can print the money, so you're going to get paid. It's like 100% guaranteed. So anyway, so Main Street Capital's got some competition as well as Realty Income. Paramount was down 2% as usual, and Smith & Wesson decided to do a rare turnaround and go against the grain of the market, scoring 2.38% or $2,000 from my account. Let's take a little bit of an in-depth look. I've got tons of strategies, option strategies. All 8,000 shares are collateral right now in call option sells. I will be receiving about $2,395 depending on what the market does. I may have big losses that more than, that dwarf that amount. Like I did here, I received like $3,000 in premium, but I got, $23,000 in losses from just the shares themselves. So it's quite a small consolation prize. It's really not cool. Next, in the investing tab, well, actually, let's talk a little bit about individual stocks, right? Apple. Let's see that 1 month performance down 10%. On the 3 month, it's still actually up somehow. On the year, it's about even, maybe up 6%. So it's holding fairly strong, pretty far away from the lows of June 16, which was 130. It's quite far down. Before we had that like 50%, like 53% retracement from the peaks of the market. And it peaked out about 175, I want to say, and now it's down to 153, somewhere in between two numbers. It's a 50% correction from that 53% bear market retracement. All right, getting to technical. So Apple, still pretty large position, $108,000 worth of Apple, representing 40% of the account. So when the big news in Apple here was basically, the phones, the 14s came out. So from on the ground reporting, right, talked to some employees from the wireless stores, or I'm sorry, the the providers that like Verizon and AT&T or whatever. And they're just saying that the 14 is in pretty weak demand, the regular ones, but the Pros are actually experiencing about just as big a demand as other phones in the past. So it's not going to be a weak sales period for the Pros. I'm expecting actually to break records on this Pro because it's a visual update and it's got some for the people who care about their phone looking the latest, they're all going to grab this one for sure. Whereas they didn't really have a reason to upgrade from like the 12 to 13, let's say. Okay. And then also Apple, well, I don't have any other news on Apple. But anyway, so Realty Income is pretty low. I mean, my judgment for Realty Income is that their dividend, if it's over 4%, I consider it a buy. But now the environment has changed, right? It's 4.66, by the way. But now the environment has changed. It's not that easy to make that determination because the competition is quite stiff, right? Like if you can get 4% guaranteed from the government, 4.66% from real estate, non-guaranteed potentially, is not a very good deal. Well, you could argue that Realty Income is pretty damn safe. I mean, they haven't missed a dividend in forever, decades. And they've been raising the dividend basically every year because of their process. They have a very, complicated financial ninja samurai type of process where they issue shares in order to buy new revenue streams and put them on the books, set them at like 1% increase every year. So they have these like really long-term contracts that they're very stable and beneficial. And they have a high capacity of occupancy and a high occupancy on their properties, and it's commercial real estate. But so they just go over there and shop. So as long as there's a fertile like shopping ground for properties and they're making good deals and they can rent them out at decent profit, this company is still this fund, I guess, is still gonna grow and continue doing what it's doing. So the moment that seizes up, we're gonna run into problems. But so far, so good. And I don't see that seizing up anytime soon. And even if it seizes up, we still got the income stream from the existing properties. It's just not going to be growing. It's just going to be kind of stagnant. So I'm not really worried about Realty Income. I think it's definitely a buy around here, or especially around the $60 level or under. It's absolute steal to me. None of this is investment advice. Obviously, you should consult professional for individual investing advice. This is not. This is for entertainment, informational purposes only. Okay, that's Realty Income. Let's go look at Main Street Capital. So Main Street Capital, I think my personal rule of thumb, kind of a rough estimation right now is 12% of the account, is the dividend has to be over 6, and it's 6.56. So I think Main Street Capital is definitely a steal. They're even doing like a little intermittent kind of surprise dividend here on the 27th. They usually do the dividend on the 15th, but they're doing a little surprise dividend on the September 27th. Let's see if I can sort it by dividends here. Let's see. History, show more, and Robinhood is, there we go. So as you can see here, this is by how can I sort it by dividends here? I'll type dividends. There we go. Search. Definitely going pretty slow. All right. As you can see, the dividends here are on the 15th, every 15th of the month. Like 184, 204. I had a little bit more that day. But you can see every once in a while, like on June 30th here, they had a little mini dividend. Then 15th. And then on March 30th, they had another mini dividend, etc. So they do these every once in a while when they have excess cash. So it's pretty cool. Like I really enjoy the frequent dividends, even if they're not that large, from Main Street Capital. Paramount. And Smith & Wesson. Nothing to see here. Next, Smith & Wesson. We got a 50% downturn here over the past year. It's pretty brutal, man. And from the peak, it's even more. It's like 60% or something. I don't know, 70%. Look at this week, 11%. Look at this month, minus 30% in a month. It's ridiculous. I mean, I saw some puts that are way out of the money, way below the strike price, and they still hit. So now I'm a questionable owner of a really large part of the company. I own, 8,000 shares, which is quite sizable. If you calculate that out, you'll see that I own a decent percent of the company. I do have call options sold against the position to all 8,000 shares. So I'll be receiving like $2,000 for that. And like I mentioned, we'll see what happens with that. Okay, let's go to let's go into the investing tab to figure out the margin. Because I know you're interested to see how much money I owe Robinhood, right? Of course. Click in the investing tab. Look at this. I owe them $108,000. Anybody got some change? I need $108,000 to pay off my debts. Brutal. So 80% levered. It's pretty big. My positions ranked by equity: Apple, Smith & Wesson, Main Street Capital. Ranked by total return: Apple, Realty Income, Main Street Capital. So look at this. So Smith & Wesson lost me as much money as Apple has gained me in like 4 years. In the span of like a month. It's real nice. Real nice, Smith & Wesson. Thank you very much. But speaking of the company, I mean, it's all right. I mean, like, they had a bad quarter, but they're expected to have better quarters in the future. They missed their expectations, and their earnings came in like 10 times lower than the previous quarter. But they're dealing with some expenses, some relocation expenses and all that. So I'm sure once they figure that out, they'll be cruising. But also they're going into a stronger buying season for their products. And hopefully the next couple quarters are looking up. Now, at least they're not losing money. I mean, I think it's a solid company. It's existed for like 160 years. It's going to exist for another one. I'm not too worried about their existence. I'm just worried about getting blown out because I'm on margin. So that's my worry right now. And I want to compare the account to the S&P 500 and see and answer the question: is the account doing better than the S&P 500? Well, let's find out. On the day, minus 0.4. The S&P 500 was minus 0.84. So yes, doing twice as good as the market today. However, on the week basis, the market's down 2.38%, whereas I am at 8.13%. So the market is slaughtering me. I mean, it's just totally having its way with me. It's slapping me around. It's shoving me into locker rooms and garbage cans, pouring sticky, glue on my hair and shoving toothpaste in my ear. I don't know. Whatever bullies do, but the market's being a complete bully relative to my account right now. So, and that's really unfortunate. 1 month, minus 19.8. Oh man, minus 9. Okay, so 10% worse than the market. This is unacceptable. 3 months. Let's see. Maybe I'm doing better on the 3 months. Up 1% for the market. My account up 2.96. Know what I'm saying? Let's go. 1 year, I think I'm also winning 5.4 just because I had such a good lead. Otherwise, I'd be just getting killed right now. So 5.4 on the year, and I think the market's still negative on the year. Yep, 14%. So that's the relative performance. So far, I'm doing okay, even considering the losses in the last month in 3. Just definitely not been outperforming, but what are you going to do, So hopefully I have a better week, end of the weekend next week. See if I can make some of those losses up. It's not looking good, though, when it comes to rates, because inflation is stubbornly sticky, according to many market analysts and economists, and that is just a promise that the rates are going to go up, which of course is a domino effect, and that causes the markets to go down because many reasons: availability of credit, higher interest rate payments for those who already have debt, and are rolling it over or whatever. And also competition for investment. If you have a lot of competition for high yielding guaranteed return, then you're less likely to go into the market and seek any kind of, seek growth or return. So people are requiring companies to show profits now, turn profitable now, because they need that yield. There is alternative. Tina is dead. Tina means there is no alternative. Tina. But now there is an alternative. There is a Tia. Tia. I don't know. Okay, I'll stop being dumb. All right, I think that's it. All right, so this is the inflation. I was going to talk about inflation. So I think that looking at the numbers, it's very unlikely for inflation to ease up when it comes to the headline number in the next couple months or a few months even, because we're coming from such a low level. You know what I mean? Like if the prices have already increased, because they judge it by increase of prices. So if the prices have already increased like 8-9%, they're not going to go down. Prices are not going to go actually down. They might stay still for a while, but they might not climb, but they're not going to go down. There's zero chance. And so if the number from the previous year, because it's judged by year over year, if the numbers in the previous year was low and this year is high, it's going to stay that way. Okay, that's what makes it so persistent. Like if we are matching, okay, the amount of the number from the previous year, then inflation is not really getting worse. Okay, it's just kind of stagnant. But next year, when the numbers roll out, they're going to be compared to a high number from this year. So if the prices were fairly stagnant, then we're going to record an actually really low inflation number. And I'm talking like a dramatic decrease. So what I'm thinking is that because of this dramatic decrease, and I'm talking like full percentage points, like 2-3% per month decrease on year over year basis, because this dramatic inflation decrease, the market's going to anticipate that the Federal Reserve is going to slow down, stop, or reverse their tightening policy. And that's going to cause all kinds of bullish behavior in the market. So that's what I'm anticipating and hoping. I think that what's probably going to happen in 2-3 months. But again, my crystal ball is not very good. It doesn't function very well. It hasn't received the latest software or something's a bit buggy. I'm about right 50% of the time. So don't listen to anything I say when it comes to like predicting and timing the market. Not good at it at all. I'm just going to keep doing whatever I've been doing, and hopefully based on my trading rules and parameters, I swim out on top. I hope that you guys are doing well too, and I'll make these updates as often as I can so I can let you know how the account is going, and please share with me how your account's going. All right, that said, I think that's it for now. Peace out.